Hi, Larry Gaines, Power Cycle Trading. In this video, I wanted to show you a way to trade the energy market. So, I started my career out in the 80s trading cargo tankers of crude oil, and we really got into a lot of different spread type trade setups. So, first off, you can see here, this is a continuation chart for crude oil, and you can see it's broken on the weekly time frame here. It's finally broken above this 200-day moving average and back above this 382. So it's got potential technically to move on up here to anywhere from $65 to $70. Now, one really great way to trade energy is to use various types of spread trade setups or pairs trades. So you can trade crude against gasoline, you can trade crude against heating oil, you can trade crude against crude. So here's a couple examples of what we call a crack spread. So one of the big favorite spread trade setups is the crack spread, and so a lot of the big oil traders do this spread. You can make a lot of money really fast, and so basically it's a pairs trade. So in this chart on the left, this is gasoline. This is the March contract for gasoline converted to a per barrel basis. So you can see here today it's trading right here currently at about $75.11 per barrel. And then crude over here is trading at about $60.19 per barrel. So what you do is you buy either, if you want to go long the crack spread, you would buy the RBOB gasoline and then you'd sell crude against it. So currently this crack spread, let's take a look and see where it is. So this would be long RBOB gasoline, short crude. So if you took the spread value, that would be the value between RBOB per barrel minus crude oil in March. That spread value right now is going at $14.77 per barrel. So what we want to do on these types of spreads, if you're going to buy it, you want to buy it, like anything else, at a swing low or cycle low, and then sell it, at a swing high. So just for example, here, if you bought this crack spread, so this would be going long March RBOB gasoline futures, short crude, if you bought it right here at $14, let's say, per barrel, that would be the spread. That would be gasoline over crude. And you were able to perfectly get out of it right here at about 16. So we'll just say $16 per barrel per spread, minus you got in at 14, so that's $2 per barrel. If you multiply that to convert it to a contract, that's times 1,000, so that's $2,000 per spread. So if you did one spread here, you bought it here at 14, sold it off here at 16, that's a $2,000 gain. So these are, some of the big oil traders. This is how most of the big traders trade, and this is another way that the smaller retail traders like ourselves can also participate in these types of trades. Hope this helps. Talk to you on the next video update.